Good evening. It's Saturday, May 6th. My name is Dave Coker, and this is Talking About Finance. All right, ladies and gentlemen, here we are together again, looking for opportunity, looking for insight, looking to earn. We only want one thing. We have one simple goal. We want to get rich. It's a modest goal, and when I say modest, I mean difficulty. It's pretty easy to get rich if you follow the right approach. The correct approach, the one true way to build wealth. Without taking excessive risk, without engaging in oddball strategies that are both likely to end up in failure. After all, we've got one chance at life. Why risk it on some strategy, some idea that can't be proven except by somebody's word, somebody who wants money from you? Why risk it on some system that can't be proven except by somebody's word, somebody who wants money from you? Instead, our system uses a very simple concept, one that we all know works: the power of compound interest. We use compound interest to help us build wealth, buying dividend-paying stocks, making regular purchases. And as dividends are paid, we reinvest that cash flow and make more purchases of dividend-paying shares. It's a simple system. It's a system that obviously works. All we need is time to slowly and consistently, over a long period, invest, receive dividends, invest more capital as well as dividends received, and move forward from there. This is a system that has been used by people throughout history to build wealth. It's a very simple approach. No book, no course, no newsletter. If you read deeply into its story, into its history, you'll find that it's been used repeatedly by people throughout history to build wealth, most often through property. But of course, we're interested in property as well as dividend-paying stocks. This approach applies to any asset that generates cash flow. So this evening, we're going to talk further about this approach while we're talking about finance. The S&P closed this week down about 80 basis points. 6 sectors outperformed the S&P 500. Information technology, healthcare, utilities, consumer discretionary, consumer staples, and industrials. Note 3 of these sectors finished down on the week, but still outperformed the S&P 500, and that's why they're green in the chart. 5 sectors underperformed the S&P 500, specifically real estate, materials, communication services, financials, and energy. And considering what's been happening this week in banking, it wasn't a bad week. The VIX traded up to 17.19. It opened the week at 15.78. And on Thursday, it hit a high for the week of 20.13. Again, the VIX is too damn low. Lots of chatter in my circles about the impact of zero-day expiration options. I haven't been able to look at data yet, so I'm reserving judgment. But check it out if you've got the time. The 10-year note closed the week at 3.43%. It's up about 1 basis point week on week, down about 40 basis points year to date. Oil closed the week at 71.36. It's down about 7.1% on the week and down about 11% year to date. And again, it was Friday, so yes, I bought Bitcoin and I bought Ripple. People keep PMing me and asking why. Well, it seems like a good idea, considering all the banking chaos, especially nowadays. So I'm going to keep buying. I got no plans to stop, and I've been buying Bitcoin for years. Ripple for a little bit over a year. I just don't have enough yet, guys. I want it all. So let's see what me and my buddies have been talking about all week. Another wonderful week of over-the-top gossip about the markets, about the products, about the people, about all the fakers seeking to enter banking, our circles. AI seems to be drawing a lot of fakers out these days. Lots of people I know are suddenly self-appointed experts in AI and are trying to start AI consultancies. Oh my gosh, it's to no end. I'm asked about these people very frequently by my banking colleagues. I just tell the truth, I don't lie. But if you haven't got a long background in AI, meaning you've published lots of content on Twitter, podcasts, written articles, it's a little difficult to believe that you're suddenly an expert. We are Global Wall Street, and we are absolutely everywhere. Yes, we're on Wall Street. Yes, we're on the City of London. We're everywhere else that matters. We're connected, and we chatter all week on a private Telegram channel. And let's face it, the stuff I like is the stuff you like. So if you're just like me, you money-loving, cash flow-seeking weirdos, that's a compliment, by the way. Let's go. 7 slides for 7 days. Oh, yeah. So this is a really interesting one. Data's from Schiller. I'm not sure who did this table. I'd have to ask the woman that put it up on the channel. Really curious. Take a look at the average returns. Of course, horizontally at the top, we've got 2 different situations. Earnings are up year on year. Earnings are down year on year. Where else can they be? Flatlining? Yeah, I guess they could, but let's ignore that instance. Look at the average return when earnings are up. 10.2%. Look at the average return when earnings are down. 9.8%. Guys, I've said this before in my articles that I published on Medium and, of course, the research that I sell my banking clients. The game is rigged to the upside. It's an old Wall Street expression. Stocks tend to go up over a long horizon. Look at this. This is from 1930 to 2021. Yeah, I'd say the game is rigged to the upside. Doesn't matter whether returns are positive, returns are negative, returns are up 10% or more, returns are up 20% or more, or returns are down 10% or worse. Regardless, returns do tend to go up. The game is rigged to the upside. But still, not everybody makes money in the markets. This is actually a good one, right? Yeah, usually what happens when people lose money in the markets, guys, is that they're trying to trade, or they're trying to time the markets, or they're trying to pick securities and stocks in the markets. My God. Just buy dividend-paying assets. ETFs that pay dividends, fantastic investments. Don't try to trade, and you're a real schmuck. Well, if you wear a white collar, you're a schmuck, but you're a double schmuck if you're paying someone for this advice. Don't do that. And we had a really interesting week in the markets, guys, off a Medium article I wrote, which of course was from a flash report I did for my banking contacts. And this is what I called the total research report that research note that my banking clients got was called Bonfire of the Banks. We had quite a week in banking. And you can see it was all over the place. Now, these stocks, a lot of these corrected and finished up on the week. And I can't remember which one it was. I'm pretty sure it was Metropolitan Bank actually finished up about 12% on the week. Really amazing. But you can see Home Street was down some 42%. And even Zion's Bank was down 10% on the week. And this was by Wednesday. And then they moved to the upside. A lot of volatility in banks. It's absolutely incredible at this point. It's really amazing what's going on. And I did write an article that I published on Medium. It was based on a research note that I gave to my banking clients. And I was suspicious because I looked at short interest. And I published this on Medium. You can go find it. And sure enough, I think it was a day after I mentioned, I'm really suspicious because short interest was surging. Yep, the SEC is looking into short interest. What a surprise. It just had a really bad vibe about it, the way the whole market was moving. Oh, and this is really cool. Check this out. This is a $140,000 Porsche that somebody saw in, I think it was LA, even though the plates say Beverly Hills. Wow, what a vanity plate. Veblen. Now, if that name doesn't mean anything to you, if that phrase doesn't mean anything to you, look up Veblen-esque demand. Of course, we know the elasticity of demand says as price rises, demand falls. But if you've got a product that is subjected to Veblen-esque demand factors, as the price goes up, demand increases. Rolex is a good example of that. Some other Swiss watches, lesser Swiss watches, I'll say, also subject to that. I'm a Rolex freak, I think, as you guys know. Cars, I don't need a car. I don't want a car. It's a big money sink. But yeah, You got to respect this license plate, Veblen. That is actually cool. And here's something pretty wild. A friend on the Telegram channel, she's over in Lebanon right now, and this is $250 US into the local Lebanese currency. It reminds me, I spent a lot of time in Istanbul, and 20 odd years ago, you'd go to Istanbul and change 500 pounds and you'd be a multi-millionaire. Oh my God, you'd have so much money. The wads weren't that thick because the Turks had bills with so many zeros. Oh my God, 12 zeros, absolutely incredible. It was really wild. But yeah, this is terrible what's going on in Lebanon right now with the inflation. And of course, we know inflation is a tax that punishes the poor mostly. It's really, really bad. So you do have to look for alternatives. And in those high inflation nations, it certainly was the case in Turkey, and I'm sure it's going on in Lebanon now. They don't want to hold the local currency. They really, really don't. They want to hold dollars, euros, British pounds, a stable currency, or perhaps even metals, or they might want to hold Bitcoin. And this makes perfect sense. Why hold the local currency when you can hold Bitcoin and you can transact in Bitcoin? Makes perfect sense to me. But of course, you'd expect me to say that since I've been buying Bitcoin from 2014. But really think about it, guys. Think about it. Once you convert your fiat into crypto, into Bitcoin specifically, and you load it onto a wallet, you're immune from whatever goes on with the fiat currencies. You really, really don't have to worry so much. Because remember, Bitcoin is designed, it rose. If you look at some of the comments in the Genesis block from 2009 that talked about the banking crisis and another bailout done by Brown, Chancellor Brown, it's a resistance movement against what goes on with fiat, where they rob us. So sometimes it's difficult to really understand, is Bitcoin going up or is fiat going down? I don't know about you, but I've got holdings and I've got wealth in Bitcoin, and I'm going to continue to put money into Bitcoin. As I always tell people, I haven't invested a lot of money into Bitcoin when you look at my overall portfolio and all my assets, but I have an awful lot of wealth. And that's what the power of buying regularly, small portions over a long period of time does for you. That's it for this evening, guys. I hope you enjoyed it. You're going to have a great week. Hopefully we're getting this banking system stuff calmed down. I'm not sure what's going to happen there. I don't really care. You shouldn't either. Don't do anything out of the ordinary. Just stay the course. Don't start selling stocks. Don't start pushing a whole bunch of money into Bitcoin in a panic move or gold or silver, things like that. Slow and steady. Take care, guys. Have a great week. Oh, the good tunes are coming on now.